For Bitcoin, the initial support that we're watching is around 56,500, simply based on a previous low. And we feel that if that level is taken out decisively, and by decisively, we mean more than a week or so below that level, we'd feel like risk is heightened to about 49 to 50,000. And if that's an uncomfortable amount of risk for someone to take, well, then they may consider reacting to that kind of breakdown.
It's Tuesday, August 27th, and this is Markets Daily, hosted by me, Jen Sanasi. On this show, as you know, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So, whether you're actively trading or simply fascinated by the volatility that is the crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. Good morning, everyone. Happy Tuesday. Joining today's show is founder and managing partner of Fairlead Strategies, Katie Stockton. Katie, it's been a while.
I know, it's good to be with you today.
Yeah, it's great to have you on the show. We are heading into September. I can't believe it. Where has the year gone?
I know that's how it feels. We're sad to see summer slip away. But it seems like the September volatility now starts a bit earlier and keeps us at our desk August too.
Yeah, that is 100% true. For all of our listeners, September is historically a weaker month for risk assets. Talk to me about what you're watching. What's keeping you at your desk?
Yeah, for me, we're highly focused on not just crypto, but also equities. And we saw this massive spike in volatility recently, and it's as measured by the VIX. And it's something that we really don't see very often. And in the environments that ensue post that volatility spike, we tend to see risk assets more choppy, sort of range bound. And obviously, we've already seen that from the likes of Bitcoin. So we suspect that equities will move into the same type of environment, sort of a choppier and a little bit more difficult to navigate type of environment in the coming months. And that Bitcoin may be giving us some clues or foreshadowing that for equities. So that's something that's been on our radar.
You said that we don't usually see this. When's the last time we saw something like this? And tell me a little bit more about what we might expect from here.
I mean, we have to harken back in a way to the 2020 COVID corrective low, which is a really major spike in volatility. It, of course, ended up being a major buying opportunity, but this time we feel like it's a little bit different, right? Obviously, the origin is certainly different. But from a technical perspective, we've identified that the markets tend to move in these sort of high volatility cycles to low volatility cycles. Thankfully, the high volatility cycles tend to last, they're not as long as the low volatility cycles, but we'd been in that low volatility cycle since late last year. So it was getting a little bit long in the tooth, perhaps. So in abrupt fashion, as sometimes the market delivers us, we got out of that with the VIX spiking up to about 65. And we feel that kind of creates a new higher floor for volatility, and that we're getting into this environment that should be characterized by more corrective phases. We're already seeing that in Bitcoin for several months now. It's really just been sort of a roller coaster ride up and down, a couple, 3 weeks at a time. And, it is frustrating because you can't assert a long-term directional bias with that in mind. But sometimes it ends up being like a healthy reset for the markets after prolonged uptrends. And we had that, of course, in the equity market and also in cryptocurrencies.
Now, how should investors be approaching portfolio adjustments during these phases if we're thinking about maintaining liquidity, managing risk?
Oh, goodness. Well, managing risk is what charts are all about, right? So we're always focused on where things change, where the momentum gauge is shift enough to warrant some repositioning. And I think in a way we're already there. At the end of this month of August, we're likely to see some of our longer term momentum gauges as I guess turned down, right? And that's enough of a shift to suggest that we should reduce our exposure. So that's the mode that we've been in, is sort of moving from this bullish uptrend or cyclical uptrend to now what is more either trading range at best or perhaps a cyclical down move, depending on what our support levels hold. So thankfully, we haven't seen much downside yet. It depends on the week, of course, but overall, we've seen more of a range bound environment. So what we're going to do going forward is just focus on support levels. Support levels can help us understand if risk is heightened. A breach of a support level, which is by definition a potential area of buying pressure, can foster more downside momentum, right? So we're really hyper focused on support levels, both for Bitcoin and Ether in our work as a way to help our clients manage risk.
Tell me a little bit more about the support levels that I know I read your report that you sent through yesterday, but talk to me a little bit about the support levels for both Bitcoin and Ether.
For Bitcoin, the initial support that we're watching is around 56,500, simply based on a previous low. And we feel that if that level is taken out decisively, and by decisively, we mean more than a week or so below that level, we'd feel like risk is heightened to about 49 to 50,000. And if that's an uncomfortable amount of risk for someone to take, well, then they may consider reacting to that kind of breakdown. It would resolve the trading range that Bitcoin's been in to the downside. Ether is a little bit of a different setup in that it's already broken the equivalent support, so the bottom of its range, and it's come into a secondary level. I believe it's around 2670 on the chart. It's sort of a moving objective, but it's testing it pretty hard right now. It's currently below. So if it spends another week or so below that key level, we'll have a breakdown that again we would be very mindful of in terms of risk management, because the next support levels another say 14% below or so. So we really want to be respectful of the levels in this type of environment, which is characterized by the heightened volatility.
Now, I want to get
Yes.
to the rest of the crypto ecosystem in just a second. At the beginning of the show, you said you also obviously watch equities. Are there any crypto equities that you're watching?
We always have them on our radar, MicroStrategy for one, or MSTR. These are our equities that at first, right? So they're going to have the influence, the top down influence from the equity market. So they're not really pure plays in a way on cryptocurrency. So we tend to steer people more towards the Bitcoin ETFs, or now also the Ether ETFs, because they're a little bit closer to the cryptocurrencies themselves, right? And how they're trading. The equities will have those other influences, and that can be detrimental, right? Especially if you're really trying to get a pure position in the cryptocurrency itself. So we generally don't recommend the equities unless you're going for not just the cryptocurrency exposure, but also the company exposure. And the company's fundamentals and their prospects, and also let those top down influences guide you, and that you feel like there's a bull market sort of at your back with those positions.
Now, I have to ask you this, and if you don't have an answer, that is totally okay because it's a little bit, well, it's not that out there given who you are, but I know everyone's watching for the NVIDIA earnings report tomorrow. Are you watching any AI tokens in relation to that?
We don't do that. That's not our thing. But listen, we are, of course, watching NVIDIA earnings. And, we always get the question, is the AI trade over? And I think that's a little bit dramatic, perhaps, but I definitely would say that there's been a shifting sentiment around AI. And I would imagine that the AI tokens will show that as well. And with NVIDIA, you can just see it in the relative performance having faltering. So it's had a pullback and a recovery, a pretty dramatic recovery at that. But the relative sort of loss of performance is what I'm paying attention to. We think that NVIDIA still holds a lot of sort of the reins over the market here, especially in the near term as we get into its earnings report, and that has the potential to allow for either maybe one more push higher before we get into a September corrective phase, or maybe it marks the start of it. So we definitely scrutinize the action, and we do feel that NVIDIA and the mega caps more broadly will get into a more range bound environment just as a function of that increased volatility, irrespective of the AI exposure.
All right, coming back to more specifically crypto now, I took a look at your 12-week relative rotation graph. It's indicating that altcoins like Avalanche, Chainlink, and Solana have gained intermediate term upside momentum. And when we compare that to Bitcoin, Ether, and Uniswap, they're doing less favorably. Talk to me about how we interpret these movements and what they might suggest about potential opportunities or risks into diversifying into these altcoins versus Bitcoin.
Well, just like any asset class, there's always these rotations, right, in the underlying. And so we used to just only apply that kind of rotational work to sectors versus the broader equity market. And when we launched this cryptocurrency compass report in 2019, we just thought we'd see if it made sense, right? If there was that same level of cyclicality within the cryptocurrency market, just choosing some sort of the top 10 market cap cryptocurrencies that we're trading. And we have found that these rotations hold some real information. Just with most charts, the relative rotation graph that we picture in our report, you want to see things going up and to the right. That's generally good.
That's the sign of things doing well. And
Yes. So it means you're seeing upside, but also outperformance and momentum behind that outperformance, sort of relative momentum. And so you can follow these trajectories, but you have to be able to reconcile them with what's happening in absolute terms, because you can have, Solana outperforming in a down tape, right? So relative performance doesn't necessarily mean that you're making money on the upside. So we really make sure to have that relative work within the context of the absolute posture of the charts. So in this type of environment, with the sentiment having sort of shifted from being extremely bullish to something that's a bit more neutral around cryptocurrencies as a function of the price action or driving the price action, we feel that Bitcoin is relatively attractive in general, certainly versus Ether in that environment, simply because of almost like the high beta versus low beta relative performance that tends to impact, I guess, the high beta segments of the markets tend to do worse on the downside, as you can imagine. So we like to be in sort of the lower beta cryptocurrencies in an environment that's characterized by more volatility, something that's more sideways to lower.
And just before we wrap up here, I want to ask you what your three big tips or takeaways are for folks who are listening to this episode, folks who are watching the crypto markets as we head into September. What are the three things that they should keep top of mind?
Well, I think if you can be long term in focus, that is generally beneficial to not only your sanity, but also your portfolio. And that certainly applies to cryptocurrencies, that there's a lot of volatility, as you know, and that goes for any type of environment, not just this current one. So if you can, buy a position that you're comfortable with as a percentage of your portfolio and ignore some of the volatility, I do think that would pay off long term. And then, of course, I'm biased as another point that charting and technical analysis as a discipline to help you navigate positions that are so volatile. And, I think everybody should take it upon themselves to learn a few of these technical indicators and how they can apply them. What suits everyone is a little bit different, right? Just depending on their time horizon, the way they think about the markets and market sentiment and how they're trading. But there are technical indicators out there that can generally help investors and traders navigate the volatility and to do so with less emotional bias, right? There's less biases when you're taking a mathematical tool and saying, is this a buy or a sell signal, or is this positive or negative momentum? So that would be certainly advice coming from a technical analyst to really learn something that will help you take out some of those biases. And then to, keep yourself honest with the support levels. If a support level is broken, as much as it might not make sense from either a macro perspective or from, whatever your thesis is, be really respectful of breakdowns and on the flip side, also breakouts, because those tend to be pretty high probability indications from the charts, meaning a breakdown tends to see downside follow through, whatever, the reason, and vice versa, the breakouts tend to see upside follow through. So we spend time looking for those levels and identifying whether we have breakouts and breakdowns.
Katie, you mentioned, really understanding a few indicators that work for you. If you were to point people to one indicator to start learning and following, what would that be?
I would highlight the stochastic oscillator. Usually I say MACD, which is moving average convergence divergence. But the stochastic oscillator we've been featuring a lot recently because we love to reconcile it across time frames using it on the monthly charts, the weekly charts, the daily charts. And taken together, you can get a pretty holistic view of price momentum and also overbought, oversold indications across different time frames. As an example, we have a short-term overbought reading in Bitcoin, and we have also now an overbought downturn on the monthly chart. So together, it increases risk, right? It increases risk of a short-term retracement and then increases risk that this trading range will keep hold here over the coming months. So it can be great for market timing. You can even apply the stochastic oscillator intraday. So it really crosses over various time frames, and we find it very valuable.
Katie, thank you so much for joining Markets Daily today.
Of course, glad to be with you.
And for everyone who's watching, listening, thank you so much for watching. Every day, if you love this podcast, subscribe on the CoinDesk Podcast Network. That is available on all podcast platforms. But if you like to watch, we are on YouTube. You can subscribe to CoinDesk's YouTube channel and like this video. Let us know what you think of it. Write what you like, what you don't like in the comments. We always read them, good or bad. Thanks so much for watching the show. We'll see you tomorrow.